Imagine a world where the power of computing is so advanced that it can solve problems in seconds that would take today's fastest supercomputers years to crack. That's the promise of quantum computing, and recent trends suggest that interest in this technology is soaring, with call volumes above normal and sentiment leaning bullish. But here's where it gets interesting. While the buzz around quantum computing is undeniable, the real-world implications and potential controversies surrounding its development are just beginning to unfold. Let's dive into what this means for investors and the broader tech community. First, a quick disclaimer. The performance metrics mentioned here are based on back-tested results, which are essentially hypothetical scenarios designed to give us a glimpse into how a particular investment strategy might have performed in the past. It's important to note that these back-tested results are not a guarantee of future success. They are derived from models built using historical data and come with several caveats. For instance, the assumptions used in these models, such as the ability to execute trades and the liquidity of the markets, may or may not hold true in real-life situations. These assumptions can significantly affect the outcomes, and it's crucial to understand that back-tested performance is a tool for illustration rather than a precise predictor of future returns. Now, let's get into the nitty-gritty. Quantum computing is no longer just a theoretical concept. It's rapidly becoming a reality. Companies and governments around the world are pouring resources into developing this technology, and the interest is reflected in the increased call volumes and bullish sentiment. But what exactly does this mean for the average investor? For starters, the high call volumes indicate that there's a lot of chatter and interest in the sector. This could be driven by recent breakthroughs, new investments, or even speculative hype. The bullish sentiment suggests that many believe quantum computing will revolutionize various industries, from cryptography and drug discovery to financial modeling and artificial intelligence. However, and this is the part most people miss, the path to realizing these benefits is not without challenges. One of the biggest hurdles is the complexity of the technology itself. Quantum computers operate on principles that are fundamentally different from classical computers, making them difficult to build, maintain, and program. Additionally, the current state of quantum computing is still in its early stages, and practical applications are limited. This means that while the potential is enormous, the timeline for widespread adoption and profitability is uncertain. Another critical factor to consider is the competitive landscape. Major tech giants like Google, IBM, and Microsoft are all vying for dominance in this space, and smaller startups are also making significant contributions. This competition could lead to rapid advancements, but also raises questions about the sustainability of individual players in the long run. This is where it gets controversial. Some argue that the race to develop quantum computing could lead to a technological arms race, with potential ethical and security implications that need to be addressed. So, what should you do as an investor? It's essential to stay informed and keep an eye on the developments in the field. While the potential rewards are significant, the risks are equally substantial. Consider diversifying your portfolio and investing in a mix of established tech companies and promising startups. And don't forget to weigh the potential long-term impacts against short-term gains. In conclusion, the rising interest in quantum computing is a clear sign that this technology is on the cusp of transforming the way we approach complex problems. However, the road ahead is fraught with challenges and uncertainties. What do you think? Is quantum computing the next big thing, or is it a risky bet with too many unknowns? Share your thoughts in the comments below.